MRT Corp has awarded 4 contracts involving viaduct and station packages for the MRT2 SSP line. The contracts are worth a total of 2.74 billion ringgit. The biggest, worth 952 million ringgit, went to Gadang Engineering. It will be in charge of a viaduct guideway and works from Serdang Raya to UPM. Trans Resources Corp meanwhile won a contract worth over 858 million ringgit. It will construct and complete the viaduct guideway from Kampung Muhibah to Serdang Raya. The last viaduct package was awarded to Acre Works for almost 716 million ringgit, involving the construction from the segment from Pesiaran Alpina to Pesiaran APAC. The award for the 3 packages was made following a meeting chaired by PM Najib. A separate meeting to determine the 4th work package was chaired by Finance Minister to Johari Abdul Ghani. That 4th job went to Sunway Construction. It will build elevated stations at Damansara Damai, Sri Damansara West and Sri Damansara East for 212.3 million ringgit. DRB-Hicom is looking to undertake an internal reorganization. This exercise will involve fully acquiring 3 companies which are in the aerospace industry. In the Bursa filing, DRB said its wholly owned subsidiary DevTech and DevTech's 96.87% owned unit CTRM have both entered into a share sale agreement to facilitate the exercise. The agreement states that DevTech will buy 100% interest in CTRM Systems Integration for 1 million ringgit in cash, 100% of CTRM Aviation for 1 ringgit in cash, and 100% of Unmanned Systems Technology for 49,000 ringgit in cash from CTRM. The total cash consideration for all 3 acquisitions is 1.05 million ringgit. DRB said this move will allow DevTech to play a more proactive role to grow the target company's businesses in the defense industry, whilst enabling CTRM to focus and expand its businesses in the aerospace and non-aerospace composites manufacturing and relevant testing. Are you a minority shareholder of canned food manufacturer Rex Industry? Independent advisor Main Street is advising you to reject the takeover offer of 1 ringgit 65 cent per share from that company's MD Dharmendran Kuntarendam. Main Street says that's not fair. That's because while the offer is reasonable, it's also a huge discount of 90 cent or 35.29% to the estimated RNAV of 2 ringgit and 55 cent per share. It adds that shareholders looking to exit can consider selling their shares in the open market if they are able to fetch better prices. Meanwhile, the non-interested directors of Rex agree with Main Street's recommendation. Dharmendran is offering to buy all remaining shares in Rex Industry after acquiring a total stake of 33.72% last month. He intends to maintain the company's listing status. CIMB Investment Bank research says AirAsia's leasing arm, Asia Aviation Capital or AAC, will be valued at over 1 billion USD. This is because the budget carrier is packaging together a whole set of current and future benefits to the new owner of AAC to push up the company's valuation. In a note today, the research house said that its best estimate for AAC's valuation is 1.2 billion USD. AirAsia is currently in the process to sell a majority stake in AAC. Assuming the leasing arm is indeed valued at 1.2 billion and AirAsia sells a 70% stake, it could reap $840 million in gross proceeds. CIMB expects the entire sum to be distributed as special dividends. This would mean a payout of 1 ringgit and 12 cent per share. AirAsia will close the bids for the stake on March 27. The sale of AAC is expected to be completed this year. CIMB is maintaining its ad call on the budget airline with an unchanged target price of 3 ringgit 73 cent. Cagamas has announced a 2.2 billion ringgit equivalent dual currency issuance. It will comprise a 5-year 2 billion ringgit conventional medium-term notes priced at 4.15% and a 1-year 50 million Sing dollar sukuk which is priced at 1.85%. The National Mortgage Corporation says the notes will be issued under its existing 40 billion ringgit medium-term notes program. The issuance was made via its subsidiary Cagamas Global Sukuk under Cagamas' 2.5 billion USD multi-currency sukuk issuance program. CEO Chong Chi Leong says that despite lingering market conditions with the higher interest rate outlook in developed markets, the 5-year ringgit issuance was priced at 4.15%. That's a spread of 43 basis points over the 5-year MGS benchmark curve, which evident investors' confidence in the company's credit strength. The papers will be redeemed at their full nominal value on maturity.